Hey, what's going on, everyone? Welcome to another segment of Crypto World Radio, presented to you by Because Bitcoin, live on Twitter Spaces. Just as a reminder, for listening to us on YouTube, feel free to leave some feedback and click that subscribe button and turn on bell notifications. That way, if you miss these Twitter Spaces, you'll be able to be notified whenever they're uploaded onto our YouTube channel. And just as a reminder, everybody, all of our content, as far as our streaming is concerned, we've moved all of that here on Twitter Spaces. So we have Market Check with our CEO Max and our analysts Premise and Snorlax, and that's usually at 11 a.m. Eastern time. And then we have Market Check with Carter, and he goes over more macroeconomic stuff and also things pertaining to the U.S. equity market. And then with myself, King Wabi, presenting you guys Crypto World Radio, where I go over all things DeFi, and sometimes we'll have special guests either in the Bitcoin community or more of like the DeFi and crypto side of things, and also some individuals that have added value into the digital asset space, such as Rebecca Liao, as we had yesterday from Saga XYZ, and also Garlam Wan from Momentum 6, and et cetera, et cetera. And without further ado, I want to introduce you guys to friends of the show, Sefi and Nakamoto. What's up? What's up, guys? How are you guys feeling today? It's good to have you, and thank you for taking the time out of your day to come and talk shop with me. And for our listeners in the audience, feel free to come up as well and join the conversation. Today's episode is more of a community space, right? I like to have these once or twice a week. Not really anything planned or scheduled, but yeah, as the title says, it's more of a general DeFi, crypto kind of stuff, and also some Cosmos discussions. With my friend Sefi, who's really knowledgeable in that space, and it's an ecosystem that we're striving to add value towards here at Because Bitcoin. And also Nakamoto Lisk always has some pretty deep insight, given the fact that he's spoken to some of the devs teams on Thorchain, and also I believe Rye, like the Rye stablecoin people. So it's pretty cool to always have that perspective on. And I'd also like to cover Say Network, guys. I've always been interested in all things developing on Cosmos. And if you guys want to know, Sayer Network is essentially a layer one platform that's designed for all things trading and giving exchanges significant advantages over their competitors. And, they do have some industry leaders such as Multicoin, Coinbase, and Delphi, and things like that. And so with these large market makers, essentially, like Say can be a pretty big force in that retrospect. And they already have like, over 60 different applications built on top of it. And they do have partners in other blockchains such as like Solana, Polkadot, Near, Terra, and they definitely have some cool things going on. So Sefi and Naka, if you guys want to discuss that, I would be more than welcome to. I don't really want to go on a tangent here. So I guess we'll start off as we usually do. How are you guys feeling? We'll start off. We'll start off with Sefi. What's up, brother? Good to have you here, man.
Doing great. Just getting off work and coming over to chill out. I was just sort of noting we might start off if people are Bitcoin fans. One of the useful indicators out there, if you haven't bothered to check on that, if you go to tradingview.com, which is like one of the best obvious chart sort of you chart applications essentially that's online. You can get custom indicators, and one of the most useful historically has been the hash rate capitulation chart, and it presents the Bitcoin hash rate really nicely, and basically shows you when there's a big drop off in hash rate on average, and there's kind of a metric called sort of like the capitulation, and it has a nice little indicator where it shows pretty much exactly when to sell and exactly when to buy within a certain range. So I've been watching this particular metric for a few years, and so far it's been spot on as far as like when to buy Bitcoin. And really with proof of work, that's really a general concept. When hash rate falls off, then it's time to start buying, because that's when the miners are shutting off because it's not profitable to mint or mine coins. So what they do is they start buying coins instead. It's cheaper in terms of electricity or whatever. So really, like below the 20,000 BTC price, that indicator sort of popped off, started dollar cost averaging in at that point, and kept going. You can try to call the bottoms and all the and tops and all this stuff, but like if you can get within a reasonable range, a reasonable time frame where it's like a good time to buy, I think that's all you really need at the end of the day. And then the same thing is true on the upside when the hash rate sort of peaks out and starts to fall again at the top of the market. It's sort of called that quite nicely as well, or pretty closely enough. Plus or minus 20%, like whatever, right? So you can use that indicator, but it's called the hash rate capitulation. And it generally, hash rates work pretty well for most proof of work systems in terms of like when to buy Litecoin or whatever. Um, and it really just demonstrates when miners are in distress. Now, is this going to work forever? Maybe not. Like maybe eventually Bitcoin's mining price will be front run. But so far, unfortunately, that hasn't happened. The price of BTC tends to fall back to mining price or even below it. And it's done this numerous times in its history. So that might be a nice, fun little hint to start out with. If people haven't used that, you can use an alarm on it too, and where you can set up certain numbers where you like set an alarm for yourself, and then it's time to start buying again or whatever. So anyway, I've been watching that for a number of years. It's been quite dead on. I would say that if all you use was that, that's pretty much enough, and it's that simple. So anyway, check it out.
Yeah, for myself, um, I've never gotten to experience with technicals on that respect. I sort of left curve it and look at prior market cycles, and typically a little after a year after the Bitcoin peak, there tends to be a period of risk to reward for upside volatility. So recently, I've looked at things like Aptos, predominantly towards like the latter half of December, and also Luna V2, as me and you have discussed for a long time now. But managed to start scaling into the position there. So with Aptos, it was really just like the amount of spaces that I saw as far as that ecosystem is concerned. You had individuals from like the UK, Africa, South Africa, even Australia, and like those spaces would have 3, 4, 500 people, and for the most part, um, it's like NFT and Web3 related, but to see that many people excited for a project, right, and having things like Alameda not be such a headwind for it, um, I took a jab on it, and it went pretty good. But I'm excited to see what they do as far as like with their move virtual machine. I know Saga is going to be working pretty heavily to work with like bridging towards that ecosystem, right, and the things that they're doing with gaming in the metaverse and all that stuff, and also things like Say Network. As I've said, I'm like crazy excited for what they're going to do. The Cosmos ecosystem definitely has a lot of things working out for it, and I believe off of a statistic that I saw, um, the overall Cosmos development team overall in the ecosystem has increased by a factor of 16x within the last 4 years. And that was really like the first ecosystem that really caught my attention. And like I know IBC really isn't like super high tech or whatever, but remember in 2017 you had all these projects wanting to like be these interoperable bridge and all that stuff, and really it turned out to be just like just pure vaporware that you would just buy on an exchange and you wouldn't be able to use it, right? But now they've sort of like evolved into these bridge tokens, right? Like Atom is essentially a bridging token, really. That's like really the main use case for it. And of course like the staking rewards and all that stuff. And same thing with Ethereum, right? But with Ethereum, you have all these layers on it, especially with ETH L2. So I'm excited for the upgrades that Cosmos is going to have, like their Lambda upgrade and their Gamma upgrade, with things like their rollups as a service and all that stuff. I think it's going to bring like a lot of a lot of like scalability to it, and it's going to be able to process to be able to process all these like things that require a lot of dev work, and when it relates to things like the metaverse. Like if you guys remember, whenever you try to use these like cheap 3D games, right, on Ethereum, it would be like, hey, you have to pay $1,000 to play this game, right? And Steffi, using the Cosmos ecosystem, like we pay pennies on the dollar, even when things get crazy, right? And there's a bunch of liquidity injected into it. So I'm really excited for what Say is going to bring, but we'll talk about that later on. So outside of that, what's going on, Naka? How are you feeling today, bro? What do you have for us?
Appreciate it. Thanks for having me on. One thing I would add about Cosmos versus Ethereum is right now, when you use one of the Cosmos chains, you're not getting the same level of security as you get on mainnet ETH, right? Now, if you're just a retail user, you don't really need that much security, right? You don't need a $32 billion economic security, or $150 billion economic security in the bull run. So Ethereum is kind of over-engineered for retail users, which is why Ethereum is scaling via rollups and why people are not going to do stuff on ETH mainnet.
Yeah, I think when it comes to things like security, um, I think that's something that's going to be implemented with like the whole Atom 2.0 thing, and there's a lot of work going on behind the scenes to sort of like onboard more devs and also more users onto it. And I recall during like the DPEG of Terra V1, like the chain was still strong enough that it didn't falter, it didn't go down or anything like that. Like it didn't shut off. And when you compare that to other chains, right, like with what happened to Harmony and their bridge, and also what had occurred in the past.
I'm not talking about security as in getting hacked. I'm talking about economic security, right? Like somebody buying all the tokens and then being able to censor or double spend or DOS or something, something like that, right? I mean, if you're using a small Atom chain, there's a relatively like limited amount of money someone would have to spend to bring that chain to a halt without hacking it, right?
Yeah, but simultaneously, the flip side of that would be, I guess, the on the smaller chains there is relatively thin liquidity, so the reason to go and do that would not be particularly economically viable for the tiny chains, even though like theoretically it'd be possible, I suppose.
Yeah, I mean, like if you have a chain where insiders hold most of the tokens, and you actually can't buy them, then it's effectively centralized, right? So, I mean, this is the thing with blockchains, right? I mean, there's a lot of like theoretical stuff you can talk about, and then there's the practicality of it that everything is sort of somewhat centralized at the moment. But I mean, just a lot of people complain about ETH gas fees being high, but what I think they don't realize is that Ethereum mainnet is like hundreds of times more secure than small Cosmos chains in terms of economic security, right? In terms of how much money you would have to spend to buy enough Ethereum to have 51% of the stake, right? And that's why you're paying so much more in gas fees to use mainnet Ethereum, because you're effectively, it's kind of like if you order an Uber, right? You can fucking order Uber Black and have a really expensive Uber. That's kind of like what mainnet ETH is, right?
One
It's really,
small like clarification there too is like to have a real attack on a Cosmos chain based on the way that the Cosmos ecosystem works. It's a 2/3 attack you'd have to make. Not exact. It's not a 51% like Bitcoin, for example. So it actually is a little harder. But yeah, your point is well taken. Like small chains, nascent chains, or whatever you want to call them, when they start out, are a bit more at risk. Oddly enough, after the big Terra crash, Terra V2 is among the highest Nakamoto coefficient chains in Cosmos. A place you can look this up is on smartstake.io. They have a lot of data on Cosmos related and other DeFi projects, but you can actually get a dashboard on SmartStake that shows you approximately how decentralized and how like what the difficulty it is to take over sort of the network.
And
Right, but the Nakamoto coefficient doesn't. That's not necessarily true because you could have the same entity controlling all of the different stakers, right?
Yeah, like a Sybil attack is what you're referring to.
Yeah, right. I mean, just because they're different, have different names, it could be the same person who's controlling all of them, right? So what really matters is the economic security, right? What's the total value of the total economic value of the stake? How much would an attacker have to lose in order to revert history on that chain? And that gives you the security of these. And this is the difference between Cosmos and ETH, right? Cosmos does not have shared security, right? So you can take any one of these little Cosmos chains and you can go and hack, you can go and economically hack one of them on its own. Whereas you can't go onto Ethereum and just say pick one DApp and just hack that one
Right.
DApp by economically buying stake, right? Because you have to buy 51% of all the staked ETH or 66% of all the staked ETH, right? Depending on what your attack is.
Yep. Yeah. They're facing this problem
really,
right now on the Luna Classic chain with all nodes having like between its white glove like validator services and their own stake, they have like almost 40%, which is ridiculous. So that's one of the contentious problems right now in one of the chains. Yeah.
right, but I mean that just people don't understand why Ethereum transactions are expensive. The reason they're expensive is because you're getting orders of magnitude more economic security than on smaller chains, right? And for most people who use Ethereum, that's not necessary. If you're just making a $100 transaction, you shouldn't really be doing it on mainnet Ethereum, which is why Ethereum is scaling via rollups. It's why you should be transacting on Optimism or Arbitrum or any of these other layer twos, right? That's the way the game's going to work, in my opinion. That's just my take as a bit of an ETH maxi.
So
Not a complete.
just briefly
Baka,
on the Cosmos side. So what's being done there, by the way? There are several kind of routes. One is interchain security, one is IBC, and the other, what the Osmosis Dex folks or the Osmosis chain folks are trying to sort out, is to create kind of a shared security model between lots of chains through what they're calling almost like a mesh network. So there's a lot of interesting things happening. So it's not stagnant, that's for sure. And there are quite a few different solutions that look quite viable. But those are sort of yet to be implemented and yet to be fully developed. So we'll see how it goes.
Guys, I do want to add something. I don't think there's necessarily a lack of security, but I definitely do see that there's a lot of disputes that take money from the ecosystem and also added to the lack of projects present. And like there's there is a thing to be said when you see other chains where there's more incentives to like use those projects that give returns. Of course, like
Bobby, your connection just went to shit for some reason.
Sorry, what was the last thing that you heard? I'm sorry.
We lost about 10 seconds there. I'm not sure.
Oh gosh. Oh gosh. Sorry about that. But what I was saying is I don't think there's necessarily like a lack of security, right? I think there's many things in the works within the greater cosmos to enhance security, right? Such as like the many implementations that are going to be put within the Gamma and the Lambda updates, right, which should be rolling out within the next 2 quarters or so. But I do see like disputes, like way too many disputes to take money from the ecosystem, and like also the lack of projects at the current moment. Whether as in other chains, you do have more incentives to enter them, given like there's games built on top of ETH and also Sol that still sort of give yield on the quote unquote Web3 side of things. But like I was saying, with things like Say, which I believe should be rolling out like second half of 2023, right? And so what's interesting about them is that like their smart contract uses the WASM module to make it easier for developers to work with Say, and they can use things like Rust-based COSM WASM library to create all these dApps. And just as a reference, COSM WASM was created to solve many of the dev problems faced by other ecosystems. And if you look at the people that are like comprised of them, as far as like the engineering aspects, right? Like you have people from Robinhood, Databricks, Airbnb, and you also have a lot of like the Cosmos OGs that have been within the ecosystem since inception, right? Like I remember being in that Telegram, right, with Django Unchained. I'm sorry if I'm butchering the word, Steffi. And there was like barely a few hundred people in there, you know what I mean? And people were debating whether or not, like, should the Atom token exist? What's the value proposition for the Atom token, right? Because you can use the Cosmos hub without a token. There was like all these sort of like speculations pertaining to the Atom token, right? And what it's going to be used for. But outside of that, you also have like people with a TradFi experience, right? Specifically, Goldman, and like I said, you have people from Delphi, Multicoin, Coinbase Ventures, like these real titans within the industry, and I think that's going to add to the value proposition as far as like adding in that extra base layer of security. And all you have to do is look at what's been happening during this bear market. You have guys like Sefi, right, that host these like large spaces, and you get to hear from these smaller Cosmos projects that are currently building out, and there's a lot more awareness, right? There's a lot more social capital in this bear market compared to the prior bear market, and I think that's going to add a lot of value to it, and it's not going to just be another chain that fails and it's going to get hacked or whatever, right? Because like the Cosmos chain as we know it, right, with the Atom token, is approaching 4 years, right? And as a whole, as far as like using the ecosystem and going to other chains like Osmosis and what have you, we're coming in close to 2 years. 2 years in the summer, right? That's when Osmosis had launched, right, in the summer of 2021, and really
and
nothing
and
crazy has
allow me
happened. And
to
and you also have.
the
I'll finish with this, Seth. You'll finish with this.
yeah.
I'll finish with this. There's also this thing called the Atlantis Ambassador Program by Say, and essentially like it's an incentive to not only build on Say, but to also like become familiar within the greater like Cosmos ecosystem. And so there's like many ranks within it. You have sailor, crewman, officer, captain, major, admiral. I believe those are the ranks. And
Do they
one.
do they have a rear admiral rank?
No, so with the admiral rank, you essentially get like a full-time position within the ecosystem, and so there's many ranks
What
like.
about are there any full time positions for rear admirals?
Or
I'm just
janitor.
asking for friends.
Be the janitor.
So like it's sort of like a
I'm
gamified.
yeah, I'm not saying I want to be a rear admiral, but I mean, it's just I'm just asking, right?
Yeah, like
So,
a regular ass captain. But
dude,
to Lisk's point, what he's saying basically is that if you're a $1 billion user, you're a $1 billion company. You can't just go throw $1 billion and park it on Cosmos Atom at the moment, because like the problem is that there's not enough economic security to handle that size of large user, whereas in Ethereum or in Bitcoin there is. That's I think what he's saying in a nutshell. Like if the economic security for large scale transactions is simply not there yet, and that's sort of like yet to be seen. We'll see what happens.
so one thing that I do want to touch on, right? We're approaching the halfway point. A project that's always been like adding in new features and whatnot has been Thorchain, and of course that's built on top of Cosmos. And I'm aware that Nakamoto has hosted a Spaces with them a couple of months back, and I have not kept up with Thorchain um, since the spring of last year, so I'm kind of out of the loop. So Naka, if you can kind of go over some interesting bullet points on what's going on with Thorchain, I would love that, bro.
Yeah, I mean, they seem to be sort of doing pretty well at the moment, as far as I can tell. Um, I mean, they have this new sort of savers program where basically the idea is you deposit BTC and you get single-sided yield on Bitcoin, and it's like not fraud yield, right? Like it's real yield that's coming from people swapping between, say, Bitcoin and Litecoin, or Bitcoin and Atom, or Bitcoin and ETH on 4chan. It's all decentralized. There's no scam. It's not like Celsius, where they're basically just giving your Bitcoin away to Zusu to go and degen with. So that seems pretty interesting. I mean, I think the main thing that's going to drive ThorChain, in my opinion, is adoption of ThorChain as a backend for various wallets, right? So you have a mobile wallet, you have Bitcoin and ETH stored, and let's say it's a self-custody wallet, right? You have some Bitcoin, you have some ETH, and you want to swap, all of your Bitcoin into ETH, let's say. Well, how are you going to do that with a self-custody wallet without touching an exchange, right? Well, you can use ThorChain, right? So ThorChain will power the back end of some of these wallets, and that's pretty powerful. And it is Cosmos, which does sort of somewhat limit the degree of decentralization of ThorChain, because there are limits to, I think they said it's about between 100 and 200 validators is the max that you can actually get with the Cosmos SDK. And that just comes from the complexity limits of the scaling of the consensus that Cosmos uses, which is this what's it called? What's the Cosmos consensus called? Tendermint, right? So Tendermint uses this practical Byzantine fault-tolerant consensus algorithm, and it has like O of n squared scaling, where n is the number of nodes. So, I mean, there's like some limitations to what Cosmos can do there. I mean, I personally think Cosmos is a little bit technologically backwards, but I mean, it's probably what I think's most bullish about Cosmos is the fact that it seems to attract a lot of devs. It seems to be, like a sort of dev-driven project or meta project, if you like, rather than like a VC-driven thing. So, the fact that it has so many interesting devs, so many interesting projects is bullish. I mean, I personally am not convinced that Cosmos are going to be able to solve the interchain, the shared security problem. Like, I think their solutions actually kind of suck, and they're really going to struggle with that. But let's see, right? It can still be a narrative, even if that's a bit of a pain point.
Yeah, we've been talking about this a little bit from the perspective of just proof of stake in general. One could argue that like pretty much all of the issues that any proof of stake network, I have a laundry list of sort of game theory problems that just simply haven't been solved. So like once you get to a sufficient enough size, like theoretically any proof of stake network can be broken. So there is that bull case for Bitcoin still from the consensus mechanism perspective at some level. On my take on just ThorChain would be, I think ThorChain is one of those things that you would be bullish on if you believe in decentralized exchanges becoming more and more successful compared to centralized exchanges. I think it's a bullish case if Bitcoin remains popular because a lot of the liquidity is there, and the desire for BTC users to be self-custodied in their exchanges, that might be a reason for you to be bullish on ThorChain. I'm really, really I have really, really good will towards sort of like the success of ThorChain for these reasons. Again, what is that a good reason to buy Rune, or is it a good reason to believe that they're going to be successful? I'm not sure, but certainly, hopefully they have the wind behind their sails and they are successful, because I think it's their success is sort of like tied to the general success of like decentralization and crypto at large. I think their vision is beautiful.
I do have a question. I do have a question to ask you guys. I do have a question. It's a bit of a mid curve take question, but is there a world? Right, where individuals can download ThorChain off of an app store and not necessarily go through like a website, what have you? Like, so I'm thinking about this from a retail perspective.
Yeah, you won't use ThorChain. You won't even know you're using it. You'll download Trust Wallet, right? And it'll just use that on the back end.
Oh, okay, so that's something that I was not aware of whatsoever. Um,
Yeah,
Yeah,
each,
like
each
for
is like
example, Wabi, some DEX aggregators already kind of flow through things like Osmosis, Thorchain, and other among other decentralized exchanges to where like Rango, for example, where you don't really notice like where the transaction's happening. It just sort of magically happens.
So what about like the privacy aspect of it? I know as far as like on the ETH side, right? You do have something like Aztec Network where it's a ZK rollup that acts as a privacy shield for all token transfers on the ERC20 side and also ETH smart contract interactions. And of course, a narrative that's always been building up, but hasn't really taken off extremely because anytime it does, it kind of gets hammered down. Is the whole ZK and privacy narrative on Ethereum, and just a little tidbit for the audience here. Aztec is basically a zero knowledge rollup, so similar to optimistic rollups, ZK rollups are a scaling solution that quote unquote rolls up transactions into batches off chain execution layer rather than executing on L1. And from a tech perspective, it is worth mentioning that the Aztec Networks rollup is secured by a Plonk-based ZK proof system, and that's a topic for another time. I don't want to overtake it by going into like the various intricacies, but essentially, Aztec has made improvements within the Plonk proof system and has developed Ultra Plonk to prove the validity of off-chain transactions. So essentially like that's going to do things like decrease gas fees by well over 30% at launch. So that's bullish. I know like ETH is primarily known to have extreme like gas fees and all that stuff whenever like liquidity gets injected into the system and there's like a ton of volume within ETH. But given again that they do plan on going into L2. Perhaps that might change. But still, there's still often the chance that like gas fees could still find a way to become elevated within L2. But again, it's all sort of like speculation at the moment. But that's a project that I'm bullish on. So it's like, wouldn't this sort of be like Thor chain in a way on Ethereum, except you're not using BTC or LTC native assets, right? Because like the whole issue here is that you want private transactions on both the smart contract end and also the token transfer end, and um, yeah, and with something like
With Thorchain,
with something like Aztec, like it has been tested and like the throughput has essentially increased from like 112 transactions to like a little over 900, right? Again, this is something that isn't like beta testnet. So there are things in the works that could potentially take some market share away from it. Because I do believe like we will be in a quote unquote multi-chain world and not this like dystopia where it's just going to be BTC and like two other chains. I think this is going to be a free market, and there's going to be a chain for everybody, just as it has been over the last 4 years.
Yeah, I disagree with that. I think it's going to be mainly ETH. I think the other stuff's going to die. But let's see. I mean, the big difference between Aztec and Thorchain, right, is Aztec is for Ethereum only. Thorchain is the big cross chain thing, right? Because you can swap any token to any other token, even if they're different chains, right? Or any coin.
and also, if I understood your question correctly, I think you alluded to privacy. Thorchain is not private at all, so just want to point that out.
Yeah, and that's sort of like not really a concern, but more of a curiosity. Like, what are some like privacy scaling solutions for something like Thorchain? Because I do believe that with the mission that they want to do, and it contributes to the ethos of crypto, the whole cypherpunk privacy, like ownership of the individual, not of the state, all that stuff. I do believe in their vision. Now it's just a matter of like, all right, how do we add privacy scaling solutions and all that stuff so that the user doesn't get like destroyed, right? Or that the infrastructure doesn't collapse. And this is just out of the sake from the end user, right? Because it doesn't matter how many like tech savvy people you have developing on like front end and back end stuff. If it doesn't appeal to end users, right, to retail. And of course there's different types of retail, and I think something like Thorchain could potentially have a market for the everyday person if Web3
Well, I
scales
think
enough.
yeah, the idea is that the everyday person is never going to see Thorchain, right? It's just going to be used as a back end for wallets, right? And so if you want to make a wallet for people where they can store their Bitcoin, Litecoin, Ethereum, uh, Cosmos, Atom, whatever, right? And you want to be able to swap between those assets and do it in a decentralized, non-custodial, way where the person has custody over their Bitcoin and ETH, and they never have to touch a centralized exchange. The way that it'll happen is Thorchain, but it'll be integrated on the back end, right? So you'll have a wallet, somebody will be able to swap their Bitcoin for their ETH, and they'll be able to maybe get yield on their Bitcoin, but that yield will come from Thorchain and the swaps will come from Thorchain, right?
Also, on this kind of concept of sort of like where does what does the end user care about? Because a lot of times we talk about adoption and this and that, and I think right now it's a bulk of the money is the large sums of money are not necessarily all retail users that care about privacy and such. But the market classically has demonstrated, both in general traditional computing and in everything else, like the human race doesn't care about privacy as much as most people think that they might. Like even on your own personal computer and stuff like that, like the easier and simpler privacy is to like use by default, like whether it's like Face ID on your phone or something like that. The reality is that like if you don't do that, people just tend to use shitty passwords, et cetera, et cetera. So like privacy and all of the blockchain things related to privacy, what you've noticed over the years, whether it's Monero on up, is that like the amount of capital that tends to flow into these things, secret network, you name it, like the capital tends to be somewhat limited, interestingly, and therefore like development budgets probably don't balloon, and as a result.
So
Also, it's a
so
fascinating
Sefi,
problem.
Sefi, what's the biggest from all of that? What's the biggest problem that you think um, DeFi faces then on that end of what you just had
Like so
mentioned?
for the privacy piece of the puzzle, like nobody has exactly solved that sufficiently. And why that matters to crypto at large is, like, let's say I am a couple of simple examples. Let's say I'm a company and I want to take customer, like, whatever, Ethereum or whatever it is. Like, I want to take funds from them as payment for something. I have to broadcast my corporation's wallet and transactions going in and out of it. And corporations are not interested in that. Like, they want their transactions to be largely opaque and like their business secrets and whatever held close to the vest, so to speak. So a public blockchain doesn't solve that problem for individuals or corporations. That's one major thing, and why you haven't seen like a mega move of corporations into crypto. That's a huge thing. Like if you run a business, if you have a corporation, you'll know what I'm talking about. If you accept money from customers or send money to customers, that's one thing. The second thing is, if you look at issues with public blockchains, you face the problem of front running related issues, and there's all sorts of different types of solutions for those type of things. But at the end of the day, it's like the privacy piece of the puzzle. Um, you have to fix that to sort of fix problems for consumers. Like, for example, if I had like maybe 1,000 Bitcoin, and you come to find out that I do, and then you can kind of like attack me directly to try to take my money from me, because it's not like you have to put me at gunpoint and take me to a bank or something. It's a lot easier to sort of like attack people in a sense. So all these privacy issues are really important. I think they're important for like the future of decentralized commerce. And unfortunately, like like most of us have worse security and privacy in the crypto space than we do in the TradFi space, just putting our money in a bank right now, to a large extent, which is really worrisome. So yeah, like the real big growth happens when these problems become not only solved but so easy to use. Like Nakamoto said earlier, like they have to be happening on the back end where the end user doesn't need to know shit about privacy. They don't need to know shit about Thorchain or anything else, and it just sort of happens magically. Because most people aren't going to figure this shit out. Most people can't even figure out seed phrases and whatnot. To be quite serious, and like I think that's a real serious concern as well. Like, but it's right now it's a big nerd game. It's not for the masses really.
Stefan, do you think that's why many institutions from TradFi have chosen things like Polygon and even more recently Avalanche to sort of try to build something on top of it, right?
Maybe
Rather than
I think corporations love well they need like a person to interface with, a business development guy or whatever, to help them figure out the way through the software. Any kind of large company is going to have like different teams of people, and they're not going to start from scratch and dig through the code and whatever the hell else, right? Like they need a way to like if I run a business and I use Oracle NetSuite, which is like an accounting package, like I want to go into business to learn how to do an accounting package, or do I want to do my business? I want to do my business. Like I want to sell coffee or whatever the hell is I do, and I just want my accounting to be taken care of, and I want that to be really a plug and play experience. So those chains that are providing that plug and play, like concierge white glove experience, whether it's Avalanche or like I think they go out of New York or something like that, or I'm not sure where their headquarters is, but and then Polygon, they're doing a lot of business development work to bring entities in, and
yeah,
that's like
they're working with a lot of like more of the TradFi venture capitalist arms. And I also noticed that with things like teams that have partnered with Polygon, specifically the Balancer team. I saw Fernando on them with a space, and Fernando does have like some dev relations with like people over at Jump on their TradFi branch. So a lot of these like Web3 / crypto projects, they're wanting to build businesses from the ground up, and kind of focus on the whole token side uh, as more of like not really much as of a priority, but sort of something extra on the side. And they're trying to do like more of equity rounds and trying to bring in more people from TradFi and essentially build out some infrastructure where the token stuff, right? Like in this case, Rune would kind of be on the back end, and potentially some utility aspect would be brought to the token, sort of like a share. But that's a whole conversation for another time. It's just pretty interesting to see the developments going on as far as like value propositions go from a funding standpoint and also a social capital standpoint. Like with Cosmos, the first thing people are going to see when they come on Twitter are essentially guys like you, Sefi, hosting these spaces with guys. Um, I don't know how to say his last name. You're gonna have to excuse me. Um, Zach, right? His last name. I don't know how to pronounce it properly. I believe he was on one of your spaces a few months back, and yeah, it's usually him on your spaces and what have you, and yeah.
yeah, like
It
the good thing
includes the
is like
user this time.
I think
It's
the Cosmos community at large tends to be more technical in a sense. Like it's a bit more of a nerd community for large, which is good in the sense that like in the last bull market, you didn't necessarily have nearly the amount of like outside of the Terra Luna UST situation. Outside of that, like a lot of the Cosmos ecosystem didn't get a lot of sort of general attention, which can be theoretically good in the sense that like it stays kind of nerdy. And that means that like people are kind of constantly building. You mentioned like a lot of developments happening, a huge amount of new developers and GitHub commits and everything else. So yeah, a lot of smart people. And when you get a lot of smart people, interesting things happen. So I think the social capital, the developer capital is there. It's kind of building up. We had a discussion the other day with like some of the Atom folks. There's a group of Atom users that, or developer community members that want to start like a grants program. We created a new tax within the Atom ecosystem, which puts about 4 million worth of Atom into the community pool per year at this current rate. And they're looking at ways to deploy some of that to attract developers. So the community voted in to tax itself, which is interesting. And the idea is to spur development on things like the Cosmos Hub and such. But another interesting thing too is like when you have lots and lots of Cosmos chains, when you have 40, 50 chains or more, an interesting side effect of that is that you have a lot of eyes on the code. And when you have a tremendous number of eyes on the code, like the possibility of finding problems, bugs, the possibility of innovating on that code or sharing information with the Interchain Foundation, which can then update and improve the code over the long run, is really interesting. It's fascinating how like when you have 50 different chains using the same or similar like code, it really creates an interesting crucible for innovation. It's a little bit different than what you see in other chains that where you don't really spin up a new layer one, you become sort of a rent seeker on an existing layer one. So it's a different model. We'll see what happens with the app chain thesis. I don't think anyone really knows for sure what will happen with, like, well, no one knows what's going to happen in crypto in general, much less the app chain thesis. But it's certainly the only major like free software development kit essentially that lets anyone spin up a Cosmos chain if they feel like it, right? So it's a very democratized thing.
Steffi, not to cut you off, but on that note, can you please tell us how Joe Chain came about, bro? That's because you're talking about the app chain thesis, and anyone, guys, in case you don't know, the Cosmos SDK is pretty open and easy to use, where you can just go and open up your own chain, and there was this sort of like this social experiment, right? And there's this individual by the name of Joe. You can find him here on Twitter. I believe his handle is Cosmos Joe or DeFi Joe, something along those lines. I'll find his profile and pin it up top. But essentially, like the whole community within the greater Cosmos got behind this guy, and they all changed their PFP to his face. And it got to a point where even Do Kwon changed his face to Joe, and you started seeing, Joe memes, Joe spaces. Like there would actually be spaces that just said Joe, so it's like,
Yeah.
and everyone
What
referenced
like
themselves as a Joe. So
what
tell us
happened in a
about that,
nutshell?
Steffi. What's
In a
going on?
nutshell, yeah, a guy by the name of Reese, who's a member of Notional DAO, he said, "You know what? Let's have fun. We're going to spin up a chain." And well, it started out with an NFT project where one of the guys that does Spark IBC, he kind of Tendermint Timmy spun up an NFT project with this funny Joe meme picture thing, and everyone bought it. And there were some games and whatnot. It's super cheap NFT. It was just nonsense mostly, but it's kind of for meme effect. And we had a lot of fun with it. And what happened was that Reese pops on. He's like, "Hey, I'm at work one night, like, and he goes, let's spin up a blockchain." I was like, "Okay, fine." So like within 2 hours, he had 3 validators up. 3 different validators said, "Okay, sure, we'll do this with you," and it was a 3 validator like play chain. I think 5 validators, maybe something like that, just for fun. We just created a chain just to show how quickly it could be done. And you had a blockchain within a couple of hours with an experienced dev sort of setting it up. And then we had this funny Joe token, and it wasn't worth anything, but it's just, the whole thing was very fun. But like the point of it was like just from a proof of concept, like it's going to be very close soon where what you as a company, like let's say you're Nike or you're American Airlines or whoever, you will be able to and remember, a big company showing up, a lot of validators will be interested automatically, right? But anybody can basically spin up a chain soon, and it's going to get easier and easier to do with like with way less coding experience, because a lot of the details and the what do you call it, the I don't know, the ease of like deploying a chain is going to really become much simpler. And as that happens, that is going to be an interesting effect on the entire crypto community, by the way. Like imagine if you can spin your American Airlines and you can own your own chain and not have to pay rent to any particular security layer, and for sure you can get enough validators to get like proper security and proper decentralization. They might be interested in that and owning their own chain, as opposed to necessarily going to like a Polygon or something like that. So we'll see if things like that start happening, but it is becoming a lot easier. And that whole Joe chain fun was sort of like a proof of concept of how quickly all of this could be done. It's pretty miraculous how easy it is now. I think people just don't get how simple blockchains have become. and how much simpler it's going to become. Like Wabi could say, you know what, I want to start a chain. I'm going to start a feather chain on Terra. And like, within a few days, you'll push a few buttons and you'll spin it up. It's actually going to be so simple. You just go and do point and click shit. Like, it's not even going to be like, you don't even need to know how to code anymore ultimately to do it, which is going to be quite the miraculous sort of fun. I think people have a lot of fun with it.
So, ladies and gentlemen, I just want to remind you guys we are coming into the close of the hour. I had a good friend of the show, Sui, who is community manager over at Neutron, a project that we've hosted here on Crypto World Radio, here on Because of Bitcoin Twitter Spaces. And I have posted up Joe's profile up on the Nest. There he shares what some of the things that are occurring on Juno Network. I understand that Hopper is bringing in some value to Juno as far as like DeFi and NFTs. So that's pretty cool. I haven't really kept up with Juno, but I have heard some rumblings here and there. So, guys, if you're interested in learning more about the Cosmos ecosystem, feel free to give Sefi a follow, and also Joe. He's up there on the Nest. His @ is Cosmos DeFi. It's right there on the Nest. Feel free to follow him. I know he covers a lot more of the Cosmos ecosystem on a daily basis. So I've checked out his content. It's pretty cool. And hopefully we'll have him here on the show over the coming weeks or months. Um, me myself personally here at Because Bitcoin and also our venture capital arm, Arca Partners, we are seeking to add in value via all of our resources across the Cosmos ecosystem. So if you guys know any particular dev or project that's currently building within Cosmos, feel free to send them in my direction, or someone like Joe. Tell them, hey, there's this frog on Because Bitcoin that is a fan of your work. He'd like to talk shop with you. Feel free to do that. And if you're a fan of everything crypto, feel free to follow us here at Because Bitcoin. I host a show here Monday through Friday at 7 p.m. Eastern time, and I host anyone from the VC space or more of like dev relations, and also some founders here and there whenever that comes about, and some people from the Bitcoin community, and sometimes individuals from within the crypto Twitter community, right? Like Sefi. He's pretty big in the Cosmos and Terra spaces. And then we have Nakamoto, who's pretty big into things like data and things like that. Things from Glassnode and TradingView and all those things. Some pretty cool, interesting stuff there. So if you're interested in anything crypto specific, follow us here at Because Bitcoin. We do cover also the equity markets and commodities and things like that on our earlier shows. But as far as our crypto specific programming, you'll find that here. On Twitter Spaces via Crypto World Radio, and sometimes we do have earlier or later spaces, depending on some time zone differences with our guests. Like tomorrow, I do have Bitcoin Jack as a guest at 8:30 a.m. Eastern time. So just a bit of a heads up: tomorrow's Crypto World Radio episode will be here on Twitter Spaces at 8:30 a.m. Eastern time. Way later than usual. I mean, way earlier than usual. Excuse me. But like I said, in case you're not able to make it to these Twitter Spaces, or you're not able to, stick for the whole thing, there are replays up on our YouTube that are uploaded 5 to 10 minutes after the space. So feel free to check out our YouTube channel anytime you want to check out some past content. We've had a little over 30 shows now on Crypto World Radio, so a pretty good portfolio across many individuals within the crypto Twitter space, and also the greater Web3 and crypto side of things when it pertains to ongoing developments. And just a bit of a surprise announcement. Just a bit of a surprise announcement for all you listeners. We will be hosting the Nillion Network, which is basically the security and privacy layer for all things Web3. They're sort of like this L2 on Ethereum. Look forward to that. And we also have Gala Games on as a guest. And we also have GMX and the team from Aave. That is all coming to Because Bitcoin Twitter Spaces via Crypto World Radio within the next few weeks. So look forward to that, guys. And you will be seeing more of the Saga XYZ team on here over the next coming weeks. Really excited for that and what they're building. And I'm looking forward to adding value across the entire digital asset space. So, if you guys know any writers or any devs within the digital asset space that, you think they could use a platform to talk about their work, or you feel like we can add more value to the ecosystem on what they're working on, feel free to reach out to me. My handle here on Twitter is King Boy Wabi, King Boy with an I, not a Y, and then Wabi. Feel free to reach out to me. I answer all DMs, and yeah, just looking forward to adding more value across the entire digital asset space. Um, and whether that's with interviews or discussion with devs or just more of these community type spaces. I always enjoy speaking with you guys anytime I do host these spaces, so it's good to be here, and I want to thank you all for coming up and showing up anytime I do these Monday through Friday. um, Always a pleasure talking shop with you guys. So if anyone wants to come up, by the way, if anyone here up on the audience wants to come up, ask some general questions, give some of your statements, feel free to click that request button and I'll bring you right on up. Um, but if not, we'll give it a few moments. If not, we'll start wrapping up here. But before that, Naka, I saw you had your hand raised. We'll finish off with you as we wait for people if they want to come on.
Yeah, I mean, I guess what I wanted to say was I'm kind of bearish on app chains. I think if you have an app chain, like a chain that's literally just for one app, you're really missing out on a lot of the value of crypto. Right? A lot of the value of crypto is composability, where you have one app that can, use another app that can use another app and so on and so forth. So, a lot of the value of like Ethereum is if I want to build a dApp, I can assume that I have access to Uniswap, right? I can assume that I have access to Aave. I can assume that I have access to Tornado. I can assume that I have access to Aztec, right? So it's like, you know, one of the sort of superpowers of blockchain is actually cooperation, right? It's being able to, instead of having to build everything from scratch, you can just build on top of what others have already built. So that makes me somewhat bearish on app chains. I think the existence of app chains is just an artifact of the fact that we're still in the early stages of learning how to scale blockchains. And once we've worked out how to scale them, I think it's not, people are not going to want to use app chains anymore.
Yeah, man. Thanks, man. We'll see how things play out. I think the greatest thing that we have in this industry, or rather this ecosystem, is that we're free to experiment, and some of them will work, some of them won't. And I'm pretty excited for what's to come over the next 2 to 3 years within the digital asset space. Whether that's developments on like more on the Ethel 2 side and ZK stuff, or some of these newer more of these newer chains such as Celestia with their blockchain modularity. Again, I'll have that on a later space, to be honest. We did cross over the hour, and I want to be mindful of our producer's time here. So that being said, I want to thank Safi and Nakamoto for coming up. Thank you guys for taking the time out of your day to come up and talk shop. It's always a pleasure to talk everything crypto and Web3. Everyone, feel free to follow Sefi. He hosts some pretty cool, alpha-based Cosmos spaces, and also some more humor spaces, right? Which is always fun, more laid back and all that stuff. I always enjoy going up on there. And also Nakamoto. He's hosted some spaces that are pretty unique that you don't really see. I saw him doing a drive chain space, which I'm still kind of lost about it, but perhaps he'll have another space on that in the future, or maybe we can talk about that on a future space, perhaps later this week or next week. So feel free to follow Nakamoto guys as well. Always some pretty good non-biased analysis. And yeah, guys, feel free to check us out here on Because Bitcoin Twitter Spaces tomorrow at 8:30 a.m. Eastern Time with a significantly earlier episode of Crypto World Radio, again with Bitcoin Jack. We'll probably make the space invite a little after the space is concluded. And then we have Market Check, which is sort of an update for all things equity markets that have happened in the overnight hours of the equity markets, like what's that thing called, like after trading is done, like post trading hours. There's usually some things that go on, and I'm aware that like some tech earnings have come out, so feel free to check out Market Check for all that stuff. They'll go over, I think, like Microsoft earnings, and I know there's another company that's reporting their earnings around these hours. I forgot which one it was. Well, that being said, if you're interested in all things equities, right, check out Market Check as well here on Twitter Spaces at 11 a.m. Eastern. And then we have Market Talk at 4:15 p.m. Eastern Time, which is hosted by Carter, and he speaks more about all things macroeconomics, commodities, what have you. And some good friends of the show always pop in there, like Dr. Jeff, Joe Carliser, et cetera, et cetera. So I want to thank you guys again, and you can catch a replay of this space in about 5 to 10 minutes on our YouTube, which is just like the handle here on Twitter, Because Bitcoin. So that being said, my name is King Wabi. Thank you guys so much from here at Because Bitcoin. Take care, and God bless you.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.